Bank of America says it's going to repay U.S. taxpayers the full $45 billion that the bank received under the Troubled Asset Relief Program, TARP. Bank of America says it's going to use more than $26 billion in what it describes as excess liquidity. We'll get into the details. And more than $18 billion in proceeds from the sale of so-called common equivalent securities. Shareholders will be asked to approve the conversion of the securities into common stock, and that would take place at a special meeting. Joining us to decipher all this, Bert Ely of Ely Company. Bert, welcome to the program.
Glad to be here.
All right, so Bert, have you ever seen anything like this? In order to try to raise $45 billion, what they're going to do is, it seems, about 18, 19 billion of what you call excess capital is going to come out of the bank?
Well, certainly not of this magnitude, but other companies that have been buying back the TARP investments from the government have had to go through the same process of raising capital and using excess capital they already had to fund the buyback of that of the TARP stock. So we've seen others doing it. This is just a much bigger dollar amount.
All right, so then what does this do to the capital ratio, Bert?
Well, according to the news release the company has issued, while this will have a somewhat lowering effect on the capital ratios, the company will still be well capitalized, and so it should not have any problems with the regulators from that standpoint. The regulators would not have signed off on this if there was going to be a capital problem.
What about the shareholders getting diluted by this activity, Bert?
Well, the shareholders are going to get diluted in a book value sense, but nonetheless, it gets the company out from underneath the TARP and particularly the compensation restrictions, and so we might quite possibly see a pop in the shares of Bank of America because they have gotten out. It'll be interesting to see what the market reaction is tomorrow.
Tell me about what's going on when you talk about asset sales. Have they sold enough assets?
Well, they've obviously been doing some downsizing and right-sizing the company as they
selling First Republic Bank, for example, as a result of the Merrill Lynch acquisition. They're selling that.
And I think that may be a matter that just First Republic doesn't fit very well, and they've had some other asset sales. This is all part of the integration of Merrill Lynch, as well as countrywide, and dealing with all the various problems they've had.
Is the reason in your mind why they're repaying the TARP, does it ease all of those constrictions over executive pay, makes it easier to find a successor to Ken Lewis, perhaps?
Well, I think that's very much a big factor. They will get out from underneath the strictures of Ken Feinberg, the pays are, and that's going to be, I think, a real positive, not just in terms of seeking a new CEO, but also in terms of retaining and attracting new executive talent.
All right. I want to thank you very much. Bert Ely from Ely Company talking about Bank of America repaying $45 billion in TARP money.